Okay, welcome to Chapter 3, Income Tax Employment Income. So this is for individuals. In this chapter we're going to look at all income and benefits an individual receives from his or her employment. Earnings. Earnings are taxed on the receipts basis, i.e. the amount of earnings received in the tax year. There are special rules for directors, however, to prevent them manipulating the receipt date. Earnings include salaries, wages, bonuses and benefits received by an individual. So I'm sure it's pretty similar to the country that you live and work within. So for an example, an individual receives a salary of £20,000 and has benefits of £6,500. His total employment income will be £26,500. This figure then goes to the income tax computation. Now, what's a benefit? Well, a benefit is something where you are provided by, say, a company car or medical or gym membership or whatever. That's a benefit and has a value that is assigned to it, and that gets taxed by the individual at their respective marginal rate. As it says here, benefits are regularly tested at F6, so you do need to be up to speed with your benefits. Exempt benefits, i.e. not taxable, you can have one mobile phone. You can have relocation and removal expenses of up to £8,000, has to be qualifying. Employer funded training, if relevant to your job. A staff canteen or restaurant, provided it's made available to all employees. It can't be just, say, directors. The calculation of the tax payable benefit is reduced proportionally if the benefit is provided for only part of the tax year. So you don't get a full charge when the benefit is only provided for part of the year. If you contribute towards the provision of that benefit, then it will come off your calculation of the benefit in most cases. Assessable benefit, living accommodation. Examiner's favourite, doesn't always come up in reality, but quite often in exams it does. This is where you're provided by somewhere to live as a result of your employment, and it's not exempt job related employment. So basically you're going to be assessed on the higher of the annual value of the accommodation, which please note they have to give you in the exam, so don't worry about what that is, and the rent paid by the employer, so how much they pay per calendar month. Additional charge for expensive properties. Well, most properties these days in the UK cost more than £75,000. You can't buy much for less than £75,000. What you need to know is it's multiplied by the official rate of interest, which again will be provided in the exam. By the way, little quirk here. If the employer acquired the property more than 6 years before providing it to the employee, the market value when first provided to the employee should be used rather than original cost. So if original cost was 100,000 8 years ago, but market value today is 200,000, then it's 200,000 that you now use. Motor cars, that's a very common benefit that's given to individuals. What you have to think about here are the list price of the car, its value when new, times by a relevant percentage. Now, the relevant percentage, where does that come from? Well, you will be given some of these in the exam, but basically the percentage comes from the CO2 emissions. So the more environmentally friendly, the lower the CO2s, the more unenvironmentally friendly, the higher the tax charge. What you do is CO2 emissions is what you're looking for. Less than 75 grams, it's 5% for petrol. 76 to 100 is 10%. 121 to 125 grams is 15%. And then basically above 125, for every 5 grams, you add an additional 1% to the 15, up to a maximum of 35%. That's for petrol. For diesels, use the petrol numbers, except you add 3%. Okay, so instead of starting at 5, it'll be 8, 13, 18, etc. But it's still 35. It's not 38. Okay, that is not what happens. It's 35%. Okay, here's a little example. Petrol list price 22,000, CO2 emissions are 147. So base percentage is 15. Each 1% above 5 grams. Sorry, for each complete 5 grams above 125 is going to be 125 minus 145 is 4. So you add 4 to 15 gives you 19. 19% times 22 gives you 4,180, which you would tax except for the fact that there's 100 per month coming off apart from the employer. So the taxable benefit is now 2,980. Okay. Private fuel is an extra cost if the employer provides it. How do you calculate that? Well, for 2011-12, what you do is you take the base figure of 18,800 and you apply the relevant percentage above to the 18,800. So for the car we just looked at, you're looking at 19% times 1,800 gives you another 3,572 to be taxed at the marginal rate, i.e. 20, 40, 50%. If you provide your employees with a private use of a van, then it's a flat rate 3,000 per annum. Private use of employers' assets. For private use of assets other than cars, vans and mobile phones, the general rule is 20% of the asset's market value at the time it was first provided. So if a big fancy TV is provided to the employee at costing £1,000, then 20% of 1,000 is 200. £200 is the assessable benefit. Okay, that is the end of chapter 3, and we now go into chapter 4, which I'll cover in the next recording. See you then.